Greetings and welcome to the lesson. Today we're going to study the classification of taxes. So by the end of the lesson, you should be able to explain the various ways through which taxation may be classified. And candidates, in this lesson, we're going to discuss 8 ways through which taxation may be classified. One is classification based on nature. Number 2, classification by purpose. Number 3, classification by progressivity. Number 4, classification by time frame. Number 5, classification by level of government. Number 6, classification by economic activity. Number 7, classification by international transactions. And number 8, classification by sector. So that is to say that taxes can be classified in various ways based on different criteria. So we're going to study some of the common classifications of taxation in Kenya. And I've said the first basis of classification is by nature. Number 1, classification by nature. Classification by nature. In classifying taxation by nature, we may have direct taxes and indirect taxes. Direct taxes and indirect taxes. Direct taxes are taxes levied directly on individuals or entities, and the burden of payment cannot be shifted to someone else. Good example is income tax, property tax, wealth tax, and so on. When an employee pays tax on income, that is a direct tax. His or her income is taxed directly, and a portion of such tax is withheld by the employer and remitted to the Kenya Revenue Authority. That is a direct tax. On the other hand, indirect taxes are imposed on production or sale or consumption of goods and services, and their burden can be passed on to consumers. For example, the value-added tax, the excise tax, the customs duties, those are indirect taxes. Those are indirect taxes. I've given an example here. Income tax. I've given an example here. VAT is an indirect tax. Excise, customs duty, and so on. Indirect tax. So this is classification by nature. Taxes can either be direct or indirect. Then there is classification by nature, by purpose. Number 2, classification by purpose. Classification by purpose. When classifying taxes by purpose, we may have revenue taxes, we may have regulatory taxes, and so on. A, revenue taxes. B, regulatory taxes. Right? What are revenue taxes? Now, taxes candidates primarily levied to generate revenue is what we are referring to as revenue taxes. Taxes primarily levied to generate revenue for the government and fund public expenditures. Then we have regulatory taxes. Regulatory taxes. These are taxes imposed to influence certain economic behaviors, such as excise taxes on cigarettes, on beer, and so on, in order to discourage smoking and such like behaviors. So taxes can either be revenue taxes or regulatory taxes, and when in such classification is known as classification by purpose. Taxes can be levied for the purpose of raising revenue or for the purpose of regulating behavior of the citizens, influencing certain economic behaviors. A good example is excise taxes. Excise. In our last lesson, we defined excise duty and so on. All right? Do you understand? Then number 3, classification by progressivity. Classification by progressivity. Classification by progressivity. Here we have progressive taxes, proportional taxes, regressive taxes. Progressive taxes, A, we may have progressive taxes. B, there is what we call proportional taxes. C, regressive taxes. Regressive taxes. Now, progressive taxes, these are taxes where the tax rate increases as the taxpayer's income or wealth increases, and they are often designed to redistribute wealth and reduce income inequalities. To reduce income inequalities. As an individual's income increases, then the tax for that individual increases progressively. Then there is a proportional tax. Proportional taxes. These are taxes where the tax rate remains constant regardless of the taxpayer's income or wealth. This is where everyone pays the same percentage of their income or wealth. Then lastly, we have the regressive taxes, where the tax burden falls disproportionately on lower income individuals or entities. That means as the income reduces, the taxpayer pays more. As regressive, where tax burden falls disproportionately. This is the opposite of progressive taxes. Here, the more you earn, the more you pay. Here, the less you earn, the more you pay tax. That is the third classification. Number 4, let me have it here. Classification by time frame. Classification by time frame. Time frame. Now, when classifying taxes by time frame, we may have one-time taxes or recurring taxes. one-time taxes or recurring one-time taxes or recurring taxes. Now, one-time taxes are levied on specific items or specific events or transactions, such as capital gain tax, which is just taxed once. When you are disposing, say, land, you pay capital gains tax once. It is a one-time tax. This is e.g. capital gain tax. Capital gain tax. Then there is recurring taxes. Recurring taxes are imposed at regular intervals, such as the income tax, which is typically paid annually or monthly. Income tax is an example of a recurring income tax, or VAT. You keep on paying VAT as you buy products, but there are taxes that are paid once on an event or a transaction. So that is classification by time frame. There is also classification by level of government. Classification 5. Classification by level of government. Classification by level of government. We have taxes that are levied by the national government. Others are levied by county government. That is here in Kenya. We read from the Constitution, Article 209, that there are taxes that only the national government can charge or levy. Others can be levied by the county government, like the entertainment tax and the property rate. The national government also can charge certain taxes on the citizens. So classification by level of government, we may have national government, taxes that are levied by the county government. In other countries, we may have federal taxes or local taxes that are imposed by local governments, and so on. The sixth classification is by economic activity. Classification by economic activity. Classification by economic activity. When classifying taxes by economic activity, we may have specific taxes or general taxes. Specific taxes, B, general taxes. You may have specific taxes or general taxes. Now, specific taxes, these are taxes that target specific economic activities, such as excise taxes on a wide range of economic activities. All right? Or products. Specific. Excise duty is on specific products. Taxes that target specific products or economic activities, such as the excise taxes or excise duty. These are taxes on, say, tobacco, taxes on alcohol, and so on. Specific. But we also have general taxes. These are taxes that apply broadly to all economic goods or activities. It's general. General taxes, they are supplied on wide range of economic activities, such as VAT, income tax, e.g. excise tax, e.g. VAT. VAT is a general tax. Excise tax duty is a specific tax. Then 7, we are moving on to the 7th criteria for classifying taxes, and this is classification by international transactions. Classification by international transactions. Here we may have domestic taxes, B, international taxes. All right? So domestic taxes apply within a single country's borders, within the borders of a country. But international taxes are related to cross-border transactions and trade with other countries. International. Transactions the taxes can either be domestic taxes. Those are taxes that only apply within the country, but there are also international taxes that relate to cross-border transactions, like customs duty, customs tariffs, and so on. Tariffs, customs duty, those are international taxes. You understand? Then lastly, we have classification by sector. Number 8, classification by sector. The first sector is industry-specific taxes. Industry-specific taxes. These are taxes imposed on specific industries such as the financial sector or the natural resources extraction. They are industry-specific. Then B, non-profit exemptions. Non-profit exemptions. Here, candidates, some taxes may not apply to certain non-profit organizations based on their mission and activities. There are certain non-profit making organizations which are not subject to certain taxes, like the corporation tax and so on, because of their nature and their mission and activities. So these are general classifications, and we had classified in this lesson, we've classified taxes using criteria. One is classification by nature. When classifying taxes by nature, we have the direct taxes and indirect taxes. The second classification is based on purpose. When classifying taxes on purpose, we have revenue taxes and regulatory taxes. Number 3, classification by progressivity. We have the progressive taxes, proportional taxes, and regressive taxes. The fourth classification is by time frame. We have one-time taxes and recurring taxes. One-time taxes, recurring taxes. Number 5, classification by level of government. We have taxes levied by the national government. The county government can also impose taxes. Number 6, classification by economic activity. When classifying taxes by economic activity, we have specific taxes and general taxes. Number 7, classification by international transactions, that we have domestic taxes and international taxes. Then lastly, we have classified taxes based on sector, industry-specific taxes, and non-profit exemptions. So, candidates, these are the general classifications of taxes. And tax systems, candidates, can be quite complex, with the varying taxes that are designed to serve different purposes and address specific economic and social objectives. And candidates, this classification of taxes can also vary depending on the country. It can vary from one country to another depending on the specific tax laws and regulations. End of the lesson. We will take a short break. When we come back, we are going to study tax shifting. But here is your today's assignment on classification of taxes. Question 1 is only one question. Explain how taxes are classified and what criteria are used for this classification. Thank you for attending the lesson. We meet in our next session where we'll study tax shifting and the factors that affect tax shifting. Bye-bye.